Everyone loves small money investing advice when it sounds inspiring. Just invest $1 a day. Start small. Compound interest will do the rest. It sounds nice. But in 2026, with inflation, expensive living, and real financial pressure, let's be honest, does $1 a day actually work? Yes, but not in the way social media tries to sell it. If you think $1 a day will make you rich anytime soon, no, it doesn't work. If you think $1 a day is enough for retirement by itself, no, it doesn't work. And if you think tiny investing can replace the need to grow your income, that is also not true. But if you understand it properly, then yes, it absolutely still works. Because the real power of $1 a day is not the amount. It is the habit, the timing, and the compounding. Let's start with the honest part. $1 a day is $365 a year. That is small, very small. In 1 year, even a high-yield savings example at 5% would only turn $365 into about $374. That is not life-changing. That is barely noticeable. And this is exactly where most people quit the idea. Because they want investing to feel dramatic early. But real investing is usually boring before it becomes powerful.
Now, let's look at the long game. Using a 10% average annual stock market return as a simple long-run example, investing $1 a day could grow to around $6,399 in 10 years, about $22,996 in 20 years, and around $66,044 in 30 years. Those are much better numbers. But even here, we need to stay realistic. First, those returns are not guaranteed. Markets do not hand out 10% every year. Some years are strong, some are bad, and future returns may be lower than historical averages. Second, $66,000 after 30 years is meaningful, but it is not enough on its own for major long-term goals in today's world. So if that is true, why does this strategy still matter? Because $1 a day is not supposed to be the final plan. It is supposed to be the entry point. That is the part many people miss. A person who can invest $1 a day consistently can usually invest 2 later, then 5, then 10, and that's when the real wealth-building engine starts. Yahoo Finance pointed out that to reach $1 million over 40 years at a 10% annual return, you would need to invest about $159 per month, a little over $5 a day, not just one. That's a much more honest benchmark. So the lesson is not that $1 a day is enough forever. The lesson is that small, consistent investing is how people build the muscle to do more. And in 2026, that matters even more. Because the biggest problem for most people is not that they started too small. It is that they never start, or they keep waiting for the perfect income, the perfect market, or the perfect time. But perfect never arrives. Time is what matters most, and time only helps the people who actually begin.
So here is the realistic truth. $1 a day still works in 2026 if your goal is to build the habit, understand compounding, and create momentum. It does not work if you expect miracles. It does not work if you never increase the amount. And it definitely does not work if you think consistency can be replaced by motivation. That is why this idea is powerful. Not because $1 is a lot, but because starting small is still infinitely better than starting late. So if someone asks, does $1 a day still work in 2026? The honest answer is yes, as a beginning, no, as a complete plan. And that difference is everything. Because in personal finance, small actions are not powerful because they stay small. They are powerful because they teach you how to keep going until they stop being small.